Good morning, everyone. This is Anne Marie. Today is Friday, November the 16th, and we are looking at SPY here on the 4-hour. We came right into the top of the gap. If you take a look at yesterday's SPY Outlook video, you'll see that I mentioned, hey, we're sitting at the 61.8, but because the base of the gap or the top of the gap is sitting at this 35.22, I do mean 135.22. Because it's sitting right there, it's going to act as a magnet and it's going to pull price into that. It actually dipped down into the region, right? But did not traverse the event. Will we fill the gap? More than likely, yes. Will it be today? I have no idea. Today is monthly options expiration, and we used to have a tremendous amount of volatility on options expiry day. Not so much anymore. It's been a bit of a whimper as we move through. Wait a second. Isn't that interesting? I had no idea that was shifted to that wick. Hey, even better. That's even better. So now they're both sitting at the same space. Beauty. All right, so what do? Here's the last gap we filled. Right? So here's the last gap we filled. Here's the support area that we broke. So we've got two areas to retest if we stage a bounce. Pre-market has us downward a little bit. I do believe that we fill the gap. I do believe that the broad market, the ES particularly, has about 4 more points to go before it comes into its support region. And the TF has done that a bit, but again, needs to pull in just a little bit more for 78.6 retracement event in the TF. TF retracement's a bit deeper, right? But the TF's been weaker by and large through the year, and of course that's a state of how small caps are faring in this particular climate. All right, so what's the trade? Well, again, if we break down below 135.15, we're going to have ourselves some more downside momentum. Right now in the pre-market, we did gap down into, what is that number? 135.12. So we are sitting inside of this region. What's the low here? 135.26. Yes, indeed. So we are sitting in the gap. Very, very likely that we fill it. We may have our last little dip. A lot of folks are thinking, hey, we're going to bounce. Let's put the brakes on. First of all, remember, the way that you trade well is by making sure you've got a lot of other participants trading along with you. I know a lot of us want to be pioneers, but unless you've got $10 billion under management, and you're keen on shifting the market on your own, probably not a good idea to be a pioneer in the art of trading. Just want to tell you, certainly your studies can be pioneering, but your entries should not. Got to be content to be a follower here, folks. Let the market tell you where it's going before you jump on in. I have seen clearly the dip over through time, and every time it's bounced, I've said, you know what? Let's let the market tell me where it's going. If it wants to bounce into a lower high, I know I'll be able to pick up a short there, right? And from the old days, like I've mentioned in a few videos before, the old days, there's a very bad habit that the old bullish days have given us. It's the buy on the breakouts or sell on the breakdown. Not so much in this environment, right? Our best bets for lowest risk, highest reward always come at the rejection of resistance or at the bounce off support. And it's going to continue to be like that. We're in a new age, folks. And it's good for those of us that are highly technical, but for some of us lagging behind, the late adopters, as it were, it's a little bit of a challenge for you. So, that being said, good luck today. I surmise that today's going to be a little bit choppy. I, of course, will be in flight early in the morning, heading to Las Vegas, and so I won't be able to see much of what's going on in the market today, but really do think it's probably going to be a little bit quiet. If it's not, we have one big flush left, and then we've got some bounce action. We've broken some key levels of support that we have not retested, and that's very, very important for price action to move nicely, right? And we want it to move nicely. We don't want to feel that we're in a train wreck environment the way that Apple is just moving down and down and down, because it never came back to test those levels that it had broken consistently and consistently and consistently. And now it's saying, hey, I think I'm just breaking all of these at the same time. I'm just going to get it over in one big flush. And so that's what's happening there. We don't really want that because it affects us psychologically, makes it very, very difficult to trade. So let's hope that it moves up into these resistance areas, fails them nicely, and we move forward. Please pay attention. Lower lows and lower highs as your candles build mean that you've got more downside. Higher lows and higher highs means that we're reversing and bringing more upside. Lower highs, higher lows, higher highs, lower lows, lower highs, lower lows, anything like that, noise. So you've just got to be careful. Pay attention to the details. The details are what's going to make you money in this business. The details keep you out of trouble, and it's the details that tell you which direction to go. Good luck, everybody, and have a great weekend.